The Supreme Court just delivered a decision that sent shockwaves through boardrooms across America. Not speculation, not rumor. A formal ruling that directly challenges President Trump's use of emergency powers to impose sweeping tariffs on imported goods. This is documented. This is on the record. And when the highest court in the country steps in to examine whether a president exceeded his authority in reshaping entire sectors of the economy, that becomes part of the real machinery of American power. When I look at what just happened, the court's decision to block Trump's tariff authority under emergency powers, I don't see chaos. I don't see crisis. I see a pattern I've watched unfold countless times over 9 decades. Power being tested, institutions responding, and the balance that keeps our system stable quietly reasserting itself. Because that's how healthy systems work. They don't avoid pressure. They absorb it, examine it, and correct course when necessary. Now, before I walk you through what this means for your investments, for American businesses, and for the broader economy, I want to be very clear about something. This isn't about whether tariffs are good policy or bad policy. This isn't about whether you support President Trump or oppose him. This is about understanding how legal boundaries shape economic reality. And right now, those boundaries just shifted in ways that will affect every business that depends on predictable trade rules. Let me start with the facts, because facts matter more than opinions. President Trump invoked the International Emergency Economic Powers Act to impose tariffs on steel, aluminum, and eventually a broader range of imported goods. The administration argued these tariffs were necessary to protect national security and to respond to unfair trade practices by foreign competitors. Now, tariffs themselves have a long history in American policy. Presidents have used them for decades, but the legal mechanism matters. The question isn't whether tariffs can exist. The question is whether this particular law gives the president the authority to impose them unilaterally without congressional approval. Several lower courts examined that question. Trade groups challenged the tariffs. Manufacturing associations filed suits. Companies that depend on imported materials argued the president was stretching emergency powers beyond what Congress ever intended. And those courts began issuing rulings that said, hold on, this statute was designed for genuine emergencies, targeted sanctions against bad actors, freezing assets of terrorists, cutting off financial flows to hostile nations. It was never designed to let one person restructure the entire American economy by declaring that steel imports constitute a national emergency. Now, those rulings made their way through the appeals process. And this week, the Supreme Court weighed in. They didn't just side with the lower courts, they went further. The majority opinion, written by justices appointed by presidents from both parties, said something crucial. The law at the center of these tariffs never explicitly authorizes the president to impose duties on imports. That's the key phrase. Never explicitly authorizes. And in legal terms, when a statute doesn't grant a power, the executive branch cannot assume it exists. That's a significant boundary. That's the court saying the emergency powers this administration relied on have limits, clear limits. And those limits matter because they determine whether future presidents can wake up one morning, declare an economic emergency, and impose taxes that reshape industries without asking Congress for permission. Now, I've spent most of my life evaluating risk. Not political risk, not emotional risk, but structural risk. The kind that determines whether a business can operate predictably or whether the rules might change overnight. And what the Supreme Court just did was reduce a major source of structural risk. They clarified that emergency powers cannot be stretched to cover sweeping economic actions without explicit congressional authorization. That's stabilizing, that's healthy, that's the system working. But in the short term, it creates friction. And I want to walk you through what that friction looks like, because understanding it will help you navigate the next few months more effectively than the people who are panicking or the people who are ignoring it entirely. Let's talk about what happens inside businesses when a ruling like this comes down. Imagine you're the CEO of a manufacturing company. For the past several years, you've operated under a tariff structure that made imported steel more expensive. That gave you pricing power. It allowed you to compete with foreign producers. You invested in new equipment. You hired workers. You built your business model around the assumption that those tariffs would remain in place because they were imposed under presidential authority that seemed settled. Now the Supreme Court says that authority was never as broad as the administration claimed. What do? You don't immediately shut down operations, but you do start asking questions. Will these tariffs be reversed? Will importers seek refunds? Will foreign competitors flood the market now that the legal foundation has been challenged? Will Congress step in to codify the tariffs, or will they let them expire? Those questions don't have immediate answers, and that's what creates friction. Businesses don't like uncertainty. They can operate in good environments and bad environments as long as the rules are clear, but when the rules themselves become the question, decision-making slows. Capital expenditures get delayed. Hiring plans get revised. Expansion projects get paused, not because of panic, but because of prudence. Now, let me explain why this matters to you even if you don't run a manufacturing company. If you own stocks, mutual funds, retirement accounts, your portfolio includes companies that are affected by trade policy, steel producers, aluminum manufacturers, automakers, appliance companies, construction firms. All of them built strategies around tariff structures that are now legally uncertain. That uncertainty affects their earnings projections, it affects their guidance, it affects how analysts value their stock. And here's the part most people miss. The uncertainty doesn't just affect the companies that benefited from tariffs. It affects everyone in the supply chain. Importers who paid those tariffs for years may now argue they were illegally imposed. If courts agree, they might seek refunds. Where does that money come from? The Treasury. And if the Treasury has to refund billions in tariffs, that affects the federal budget, which affects bond markets, which affects interest rates, which affects every borrower in America. I'm not predicting that cascade will happen. I'm explaining why institutional investors, the big firms, the pension funds, the insurance companies, pay very close attention when courts challenge the legal foundation of major economic policies, because even low probability events move markets when the potential scale is large. Now, let's talk about President Trump's response, because his reaction tells us something important about how the administration views this ruling and what they might do next. Trump has already signaled he disagrees with the decision. He's argued the court is overstepping, that emergency powers exist precisely so presidents can act quickly to protect American industries, and that judicial interference weakens the executive branch's ability to respond to economic threats. That's a predictable response. No president likes being told their authority has limits, especially on issues they view as central to their agenda. But here's what matters more than the rhetoric. What will the administration actually do? They have several options. They could ask Congress to pass legislation explicitly authorizing the tariffs. That would solve the legal problem. But it requires congressional approval, which means negotiation, compromise, delay, things this administration has generally tried to avoid. They could appeal the decision, though given that this came from the Supreme Court, there's no higher authority to appeal to. They could try to narrow the tariffs, impose them under different legal authority, or negotiate agreements with specific countries that accomplish similar goals without invoking emergency powers. Or they could simply defy the ruling, continue collecting the tariffs, and dare Congress or the courts to stop them. That last option would create a constitutional crisis. And while I don't predict it will happen, the fact that it's even possible tells you how high the stakes are. Markets are watching all of this, not with panic, but with alertness. There's a difference. Panic is emotional, alertness is rational. Right now, investors are alert because they understand that legal uncertainty around tariffs creates economic uncertainty around everything. Tariffs touch, and tariffs touch a lot. Let me give you some perspective from my decades watching how institutions respond to moments like this. The businesses that thrive during periods of regulatory or legal uncertainty are the ones that don't depend on favorable policy environments for their competitive advantage. They succeed because they have strong brands, efficient operations, loyal customers, and business models that work regardless of who's in power or what the courts decide. I remember watching similar dynamics play out in the 1970 seconds when regulatory frameworks around energy and transportation were being rewritten. Companies that had built their entire strategy around favorable regulation struggled, but companies with genuine competitive advantages, real operational excellence, strong management, they adapted and thrived. The same pattern repeated in the financial crisis, in the tech bubble, in every major regulatory shift I've witnessed. The survivors aren't the ones protected by government policy. The survivors are the ones who create value independent of that protection. So if you're thinking about where to position your capital right now, focus on those fundamentals. Look for companies with low debt, strong cash flow, and competitive advantages that aren't based on tariff protection, because when the legal ground shifts, those are the businesses that remain stable. Now, let me talk about what happens in Congress, because that's where this story goes next. The Supreme Court didn't say tariffs are illegal. They said this particular method of imposing them exceeded presidential authority. That puts the ball back in Congress's court, and Congress has options. They could pass legislation that explicitly authorizes the president to impose tariffs for national security reasons. They could write new statutes that define emergency powers more clearly. They could hold hearings, gather testimony, and craft compromises that balance trade protection with institutional boundaries. But here's the reality. Congress moves slowly. It's designed that way. The founders didn't want quick action on major economic policy. They wanted deliberation, debate, multiple perspectives, checks on hasty decisions. So even if Congress wants to act, it will take time. Committees will form, witnesses will testify, amendments will be proposed, lobbying will intensify. And through all of that, businesses will be operating in an uncertain environment. That uncertainty has costs. I want to be very specific about what those costs look like. When a manufacturing company doesn't know whether tariff protection will continue, it delays capital investment. That means equipment manufacturers sell less. It means construction firms get fewer contracts. It means workers who would have been hired remain unemployed. And those ripple effects spread through the economy in ways that don't show up immediately in headlines, but absolutely show up in GDP growth 6 months or a year later. The same dynamic affects importers. If there's a possibility that past tariffs might be ruled illegal and refunds might be available, importers will pursue those refunds aggressively. Their shareholders expect it. Their boards demand it. That creates litigation risk for the Treasury, compliance costs for customs and border protection, and administrative complexity that slows trade flows. Even if most of those refund claims ultimately fail, the process itself creates friction, and friction is expensive. Now, let me address something that I know concerns many people who have followed President Trump's trade policy closely. Some of you supported these tariffs. You believed they were necessary to protect American workers and American industries from unfair foreign competition. And I'm not here to tell you that concern is wrong. Trade policy is complicated. There are legitimate debates about whether free trade always serves American interests or whether strategic protection of key industries makes sense. But here's what I want you to understand. Even if you believe tariffs are good policy, the way they're imposed matters. If a president can declare an emergency and reshape the economy without congressional approval, that power doesn't disappear when a different president takes office. The next president could use the same authority to eliminate tariffs you support, to impose regulations you oppose, to redirect entire sectors of the economy based on their priorities instead of yours. Unlimited executive power is dangerous regardless of who holds it, and that's what the Supreme Court just reinforced. The court didn't say tariffs are bad, they said the process has to follow the law, and following the law means Congress has a role. That makes the process slower and messier, but it also makes it more durable. If Congress passes tariff legislation, it can't be undone by the next president's signature. It requires new legislation, new votes, new coalitions. That creates stability, even when it creates frustration. Now, I want to address something else that's probably on your mind. Does this ruling mean tariffs are going away? Not necessarily. What it means is that tariffs imposed under this particular emergency authority are legally vulnerable. Congress could still pass tariffs through normal legislative process. The president could negotiate trade agreements that include tariff-like provisions, or the administration could find different legal justifications that courts find more persuasive. The ruling doesn't end tariffs. It ends the idea that one person can impose them unilaterally by declaring an emergency. And that's an important distinction, because the long-term health of any economic system depends on power being balanced, not concentrated. When one branch can act without oversight, mistakes compound. When multiple branches must coordinate, decisions get vetted, consequences get examined, and the system stays resilient. Let me tell you about a pattern I've observed over and over. Every time there's a major court ruling that checks executive power, people predict two things. Supporters of the president say it will cripple the government's ability to respond to crises. Critics say it will restore constitutional order. And in almost every case, both predictions turn out to be exaggerated. The government continues functioning, crises get managed, and the system adapts. I watched this happen after the Supreme Court ruled against President Truman's seizure of steel mills during the Korean War. People said it would undermine national security. It didn't. I watched it happen when courts limited President Nixon's claims of executive privilege. People said it would paralyze the presidency. It didn't. I watched it happen when the Supreme Court checked President Bush's detention policies after September 11th. People said it would endanger the war on terror. It didn't. The pattern is consistent. Courts set boundaries, presidents adjust, Congress fills gaps when necessary, and the system continues operating within a framework that's more predictable, more stable, and more durable than it would be if any one branch had unlimited authority. That's what the Supreme Court just reinforced. Not that tariffs are wrong, but that the process matters. The checks and balances matter. The limits on executive authority matter. And those limits, even when they're uncomfortable for whoever's in power, make the system stronger over time. Now let me talk about market psychology for a moment, because understanding it will help you navigate what comes next. Markets don't actually care whether Trump's tariffs stay or go. Markets care about predictability. If the tariffs are gone but the rules are clear, markets can price that. If the tariffs remain but the legal foundation is uncertain, markets struggle. Uncertainty is what markets cannot efficiently price. That's why you see volatility when court rulings challenge established policies, even when those policies weren't universally loved. What investors are trying to figure out right now is this: will there be a stable tariff regime going forward, and what will that regime look like? If Congress acts quickly to codify tariffs through legislation, uncertainty resolves and markets stabilize. If Congress deadlocks and the issue remains in limbo, uncertainty persists and markets stay cautious. If the administration tries to impose tariffs through different legal authority and those get challenged too, uncertainty compounds. The key variable isn't the substance of trade policy. It's the process through which that policy gets made and enforced. And right now, the Supreme Court just said the process needs to run through Congress, not just through presidential declarations. That's a significant procedural shift with real economic implications. Let's talk now about the international implications, because this ruling doesn't just affect American businesses. It affects every country that trades with us. Foreign governments have been watching closely to see whether U.S. trade policy is predictable or whether it can change overnight based on one person's decision. This ruling tells them something important. It tells them that American trade policy, even when aggressive, operates within legal constraints. Courts can review it, Congress has a role, the system has guardrails. That's reassuring to trading partners who want stable relationships. It's also empowering to countries that felt bullied by unilateral tariffs. They now have legal ammunition to challenge similar actions in the future. That could lead to more litigation, more complexity, but also more predictability in the long run. Because when everyone understands the rules, even if the rules are complicated, business can plan accordingly. Now, some people will argue this ruling weakens America's negotiating position. They'll say that if the president can't act quickly and decisively on trade, foreign competitors will take advantage. I understand that concern. Speed matters in negotiations. But unchecked power also has costs. It creates instability. It makes long-term planning impossible. It scares away investment because nobody knows what the rules will be next year. The strongest negotiating position isn't the one where you can do anything you want without oversight. The strongest position is the one where your commitments are credible because they're backed by institutional stability. And institutional stability requires limits on power, even presidential power. Let me bring this back to what you should do as an investor. First, don't overreact. This ruling doesn't mean the economy is collapsing or that markets are about to crash. It means one legal framework for tariffs has been challenged. That creates short-term uncertainty, but uncertainty is different from catastrophe. Second, review your portfolio's exposure to trade-sensitive sectors. Not to sell everything, but to understand where you have risk. If you're heavily invested in companies that benefited from tariff protection, you need to know that protection may not be permanent. Diversification matters more than ever when the rules are in flux. Third, focus on quality. In uncertain times, quality businesses with strong fundamentals outperform. They have the resources to adapt, the flexibility to adjust strategy, and the resilience to weather volatility. Those are the companies that compound wealth over decades, regardless of what courts or presidents decide this year. Fourth, stay patient. The legal and political process will take time to work itself out. Congress may act, the administration may adjust, courts may issue clarifying rulings, but that process won't resolve overnight. If you're a long-term investor, and you should be, short-term legal, battles are just noise. What matters is whether the businesses you own can create value over 10, 20, 30 years, and the best businesses can do that regardless of the tariff environment. Now, I want to close by talking about something bigger than tariffs or Trump or any single court decision. I want to talk about why institutional strength matters. Over my lifetime, I've watched this country face countless challenges: economic crises, political scandals, international conflicts, social upheaval, and every time, people predicted collapse. They said the system was broken, that democracy couldn't survive, that markets would never recover, and every time, they were wrong. Not because the challenges weren't real, they were, but because the institutions held. Courts enforced limits, Congress legislated, presidents adapted, and the system, messy and slow as it is, corrected itself. That's what I'm watching right now. Not a system failing, but a system correcting. The Supreme Court reminded everyone that emergency powers have boundaries. That's uncomfortable for this administration. It creates uncertainty for businesses. It complicates trade policy. But it also reinforces something essential. Power in America is not unlimited, even presidential power. And that constraint, that friction, that constant push and pull between branches is what has made this country the most successful economy in human history. Not because we avoid conflict, but because we channel it through institutions that force accountability. So when you see headlines about the Supreme Court blocking Trump's tariffs, don't think crisis. Think correction. The system is doing what it was designed to do. And investors who understand that, who stay focused on fundamentals instead of reacting to every political drama, are the ones who build lasting wealth. This ruling will create volatility in the short term. Businesses will adjust. Markets will reprice. Analysts will revise forecasts. But the economy is bigger than any one policy. It's built on millions of businesses, hundreds of millions of workers, and a legal framework that, for all its flaws, remains the most stable and predictable in the world. That stability just got reinforced. The court said power has limits. Those limits will be uncomfortable. They'll create friction. They'll They'll slow down some policies and speed up others. But over time, they make the system stronger. And strong systems are what long-term investors need. So stay calm, stay focused, stay invested in quality. And remember that the best time to build wealth is often when everyone else is distracted by political noise. Because while they're watching the drama, you're watching the fundamentals. And fundamentals, over decades, always win. Thank you for your time. Thank you for thinking through these issues with me. And as always, stay patient, stay rational, and stay focused on what matters. The system is working, the institutions are holding, and if you keep your principles steady, you'll be positioned exactly where you need to be when the noise fades and clarity returns. Because clarity always returns. It just takes time, discipline, and trust in the institutions that have served us well for generations. That trust isn't blind. It's earned through moments exactly like this, when courts enforce boundaries, when checks and balances function, and when the system proves it can correct itself even under pressure. That's the real story here. Not political drama, not market panic, but institutional resilience. And resilience is what creates the environment where wealth compounds, businesses thrive, and investors who stay disciplined prosper over the long term. I'll see you next time. Stay steady.